AI is transforming the world, but what does it mean for real estate? As technology evolves, so do the opportunities in public REITs. From data centers powering the digital age to new trends in commercial property, how can investors position for what's coming next? We're going to break that all down for you right now on UBS Trending. Hi, everyone, and welcome to UBS Trending. I'm Anthony Pastore. Thanks so much for joining me today. My guest is Matt Werner. He is a managing director of REITs at Chilton Capital Management. We're going to talk about the REIT space, which is evolving literally as we speak. So, Matt, welcome to the conversation. Good to have you on this UBS Trending. I wanted to get right into it with you because when we're talking about real estate investment trusts, in the past, we've talked about public REITs as we were just talking about this a little while ago, office buildings, malls, multifamily apartments, but it's evolving. But before we get into the evolution, why are public REITs still an important aspect of any diversified portfolio, especially as this technology continues to change the landscape?
Yeah, thanks for having me, Anthony. Good to be here. It's just a very evolving space over time. As we all know, real estate goes through cycles, and you can go back. It's one of the oldest industries, and people have always needed a place to live, a place to buy things, a place to go to, see their friends and to spend their money. And real estate is at the core of all of that. And it doesn't mean that it can't have some down cycles, but also up cycles. And what's happening today with AI certainly is producing maybe some acceleration in how the cycle is progressing, but I don't think that it's going to have any change in relevance for what at the core real estate is the service that is providing, which is a place to live, a place to go shop, a place to travel and use a hotel, a place to store your goods and be an essential part of the logistics delivery chain to get goods where they need to go. And so this has been, past few years have certainly been a little rough from a valuation perspective, but the fundamentals are great. And being diversified between, an equities and fixed income portfolio into real estate at certain points is going to be beneficial, and other points maybe less so. And that can change very quickly. And if you look back, REITs have outperformed the S&P over a long period, and then this most recent period has been underperforming. There's no reason to think that things won't go back the other way.
Right, right. And, I want take me through this, Matt, because, a few years ago, obviously, we were all starting to really become very comfortable with online shopping, various websites that allow us to just literally shop on our phones. We're talking goods, grocery items, even big, items like cars. You can actually order a car online these days. You barely have to walk into a showroom. So we know that, there's been this conversation, the death of the shopping mall and the death of the retail store, the brick and mortar store. And, and it hasn't truly happened. As you said, there's still a need for these types of institutions. But the question now keeps coming up about next gen real estate with AI. It is creating obviously new opportunities for investors and consumers, but within the REIT space, there seems to be a big opportunity that's adding to the asset class because you're looking at data centers, you're looking at towers. How do you kind of play that into traditional REITs and sort of this next gen, evolution of the AI REIT part of the asset class?
Yeah, it's a great question, and would love to talk maybe about some things people think they know and don't know about REITs and the investment opportunity in real estate. As you mentioned, I think there's has been, for anyone who hasn't been following the industry, a perception that it could be just, dominated by malls and office buildings. And if you want to, have some view that those are not part of your daily life anymore because you work remote and you order everything online, then you should never invest in REITs. Well, in the public REIT index, office is about 5.5% of the index, and malls are about the same, and that compares to what you were calling next gen, or I would call it kind of less traditional REIT sectors that are over 60% today. That includes industrial warehouses, which again, maybe those are pretty boring, 30 years ago, but now we're talking about, highly automated um, service centers for, Amazon and all the top logistics providers. And we're talking about data centers, cell towers, things that are a lot less cyclical, I think, and less where, you could have GDP growth slow down, and historically that would really mean a big downtrend for something like industrial. Warehouses were typically the first to feel a downtrend in the economy and also on the up. But now with e-commerce and just the reshoring of manufacturing and all of that, there's just so many secular drivers that are happening today. Senior housing is a big one. I love to talk about where the you know aging is not something that's cyclical. There are a lot of people that are turning 80 more than ever, and it'll be increasing every year for the next 10 years. So they need a place to live, and it's hard to say it's next gen because it's the oldest generation, but it is a very essential part of the life cycle, and these companies are doing a very good job of servicing that segment of the population that's only going to continue to grow.
Yeah, and it's funny because when I was doing a bunch of research before we sat down today, when you looked at what the market calls a next gen real estate opportunity, senior housing was involved in that as well, and I would have thought that would have been something more traditional, but I'm imagining it's because so many more folks are living longer, and obviously the number of folks in generations that are the millennials and the Gen Zs, as they're getting up in their years and looking to prepare for their own retirements, which they're getting ahead of more than previous generations, it seems like there's even more of a need. So it's become sort of a next-gen investment within REITs. So that's an interesting story for me looking at senior housing.
Yeah, and it's an interesting one too because it was historically one where because of the REIT rules, there was this layer of separation between the landlord and the actual operator, and there was a fixed rent that would go up by a certain percentage every year, and so there was the incentives weren't exactly aligned. The operators tended to um, but not invest as much in some of their properties. And then there was a change in the ruling, call it 20 plus years ago, where the REITs were actually, their rent was based on the operations of the underlying real estate in the senior housing facilities. And it has really kind of revolutionized and aligned the incentives, and their management by these larger REITs has become so good that they can buy one that's maybe managed pretty well from an average owner, a private equity owner for sure, and implement some best practices, and they can save money and create a much better experience for the tenant. And just even thinking about AI and disruption, REITs in general, not the most labor intensive industry, but there are a couple segments that are. Senior housing is one of them. It takes a lot of people to serve the tenants in a senior housing facility a lot more so than a multifamily. And there's just a lot of room for making that experience much better at a lower cost, and that can drive investment yields. And that's exactly what's happening in the industry today.
Yeah, it's a really fascinating evolution. And as we're talking, I just said to you, like, we could probably come back 6 months, 8 months from now, and things are continuing to evolve. So clearly, we touched on the opportunities that exist within REITs, and it's just ever expanding. But before we let you go, Matt, I want to ask you some of the risks that you're seeing maybe for investors who are considering REITs in their portfolio, especially as AI becomes more adopted within the space or adjacent to it. There's things like cybersecurity and other digital sort of risks that are involved. What are you seeing as risks for investors here?
The data center, you mentioned cybersecurity, there's always risk in there, and with a data center being shut down and tenants not liking that and wanting to move out, or hacking happening, which there's been a few instances of that, especially if that data center is performing some service that is this AI becomes more ingrained into people's lives. You can't, if you have a self-driving car, that would be a bad thing if it's shut down for even a split second. So there's risk there. There's also some overbuilding risk in data centers, which I don't see any risk of that in the near term, but there is a lot of data centers being built today. The publicly traded REITs are being quite disciplined in their capital allocation and development, but others less so. And what that terminal value is of something that's built in a remote area that's a very expensive building with a lot of power infrastructure. What someone's willing to pay for that 30 years from now is going to be a lot harder to figure out than what an apartment building is going to be worth in 30 years. So there's certainly risk there. Kind of going back to my initial response on REITs as an investment case and where it fits in the portfolio. The AI story is going to benefit some of these tech players a lot more than the real estate players, and I do think that is reflected in valuations today. There's a chart I like to show with the spread between the S&P multiple and the REIT multiple, and it's at an all-time wide spread going back to basically .com era time, so 26-year low or high spread where historically REITs actually traded at a higher multiple, and now it's at a much lower multiple. So could that stay low for a while because the profits are just so great and the growth is so good in tech? Sure, but there is I believe, going to be some regression and some rotation into something that may not be setting a new all-time high every day. REITs are still off more than 10% from their all-time high in 2021 and are putting up some accelerating growth numbers. And I don't think any of this AI stuff is factored into what we're seeing in terms of growth projections for REITs. And so I think there's a lot of upside to REIT earnings. I think that it's not factored into the numbers today. And I think the consolidation story I was kind of hinting about with senior housing is something that I think can happen in multiple other REIT sectors when the cost of equity becomes more accommodative. And I think that is going to happen as this rotation happens. And again, that will give the REITs another leg of growth that's not factored into estimates today.
Excellent. Matt, thank you very much. It really is a compelling story, and certainly one that, as we keep saying, continues to evolve. So thanks for joining us today. Good to have you, and hopefully we'll get you back soon. Good to see you, Matt.
Enjoyed it. Thanks, Anthony.
Thank you, Matt Warner, again from Chilton Capital Management. And for more information on anything we talk about on this show, please visit our website at ubs.com/views. Plus, you can follow UBS on social media. We're on LinkedIn and Facebook. We also have a dedicated channel on Instagram. Follow us at UBS Trending. Lots of content there for you to take a look at. And as always, if you'd like to continue this conversation with your financial advisor, we recommend that you do that if you have any additional questions, of course, about your portfolio. Until next time, I'm Anthony Pastore. Have a great rest of your day, everybody, and remember to keep your eyes on what's trending. We'll see you soon.